So, you're thinking about buying a house. Huge step, right? It's probably the biggest loan you'll ever take out. But have you ever stopped and wondered, where does all that money actually come from? It's a bit more complicated than you might think. Come on, let's follow the money. I mean, is it just sitting in a massive bank vault somewhere like in the movies? Piles of cash just waiting for you to sign on the dotted line? Well, not quite. The real story is actually a lot cooler, and it's going to take us on a journey through the whole financial universe. Okay, so for any big quest, you need a map, right? So let's start there. We've got to get the lay of the land, and that means understanding the huge economic forces that are going to shape pretty much every step you take. So the first thing to know is that there are kind of two big weather systems in the economy: inflation and deflation. You hear these words all the time. Basically, inflation is when there's way too much money chasing not enough stuff, so prices for everything go up. Deflation, well, that's the opposite. Prices for things, including houses, actually start to go down, and the economy is always kind of wobbling between these two. And who's trying to keep everything balanced? Kind of like the wizard behind the curtain? That would be the Federal Reserve, or as you'll hear everyone call it, the Fed. They're the country's central bank, and they've got this huge lever they can pull. They control how much money is available to other banks, which is how they basically set interest rates. So, how does some decision made by the Fed actually hit your wallet? Well, it's like a domino effect. The Fed tweaks the money supply for banks, then the banks have to raise or lower their interest rates, and eventually that change trickles all the way down to the interest rate you're going to get on your home loan. So, yeah, these huge economic forces have a very real impact on your personal journey to buying a home. All right, so that's the big picture. Now, let's zoom in. Let's talk about you, because you're the hero of this story, right? It's time to get you ready for the quest, and that means figuring out what you need to get started. First up is something called loan-to-value, or LTV. All this is the percentage of the house's price that a lender is willing to loan you. So if you have a high LTV, it means you can make a smaller down payment, which is great. But from the lender's perspective, it's a little bit riskier. Okay, next on the list is equity. This is basically your net worth on paper. It's a super simple calculation. Just take everything you own and subtract everything you owe. Lenders love to see a healthy amount of equity because it shows you're financially strong, and the more you have, the more they trust you. And then there's liquidity. This one's all about cash. How fast can you get your hands on money if you need it to pay your bills? You know, having a bunch of assets is one thing, but having actual cash, or things you can sell for cash really quickly, is what gives a lender that warm, fuzzy feeling of security. You know, lenders take all this stuff, your equity, your liquidity, your whole financial history, and they boil it all down into one super powerful number: your credit score. The one you hear about most is the FICO score. Think of it as their instant snapshot of how reliable you are. A great score? That's like having a golden ticket on your home buying quest. And finally, you put all of this together in your official quest charter, the loan application. Now, I know, it can look totally intimidating, but it really just boils down to 5 key pieces of information. Stuff about the property, stuff about you, where your income comes from, what your housing expenses look like, and basically a snapshot of your finances. It's you telling your financial story. Okay, so you've done your homework, you've got your documents in order. Now it's time to actually meet the money keepers. So who are these people and institutions that are actually going to fund your quest? Well, they basically live in 2 different kingdoms. First, you've got your institutional lenders. These are the big guys, huge corporations that lend out the money their customers deposit. Then, on the other side, you have the non-institutional lenders. This is a much more varied bunch of private people and smaller organizations. Over in the institutional kingdom, you're going to meet the giants. We're talking federal savings banks. And fun fact, they actually provide more home loans than anyone else. You've also got your standard commercial banks, and even life insurance companies get in on the action, though they usually stick to massive commercial projects. Now, the non-institutional kingdom is where things get really interesting. It's super diverse. You could get a loan from a private person, hey, maybe even the seller of the house. Or you could work with a credit union, a real estate investment trust, also known as a REIT, a pension plan, or a mortgage banker. The point is, there are way more paths to getting that funding than you probably thought. But what if you need a little boost on your journey? You know, a little extra help? Well, that's when you can look for some really powerful allies, government-backed programs that can make your home buying dream a whole lot easier to achieve. So these allies offer a few different paths. There are FHA loans, which are insured by the government and are awesome because they often let you make a really low down payment. For eligible veterans and service members, there are VA loans, which are government guaranteed and often require zero down payment. And then you have your standard conventional loans from private lenders, where the rules can vary a bit more. Each one is a totally different tool designed for a different type of home buyer. So let's fast forward. You met the lenders, you got the loan, you have the keys to your new place. Story's over, right? Well, not exactly. We need to take a quick peek behind the curtain at what I like to call the mortgage afterlife. This is where we enter the secondary mortgage market. It's exactly what it sounds like, a marketplace where the bank that gave you your loan can turn around and sell it to another company. Now, why on earth would they do that? Simple. It frees up their cash so they can go out and give loans to more home buyers just like you. It's what keeps the whole system moving. And the big players in this market has some names you've probably heard before, even if you weren't sure what they did. You've got Fannie Mae. They buy and sell all kinds of loans. You have Ginnie Mae, which is a government corporation that sells mortgage-backed securities. And then there's Freddie Mac, which mostly buys loans from savings banks. Think of these three as the giant engines that keep the money flowing through the system, which makes it possible for more people to start their own journey to homeownership. So there you have it. The money for your mortgage isn't just sitting in some dusty old vault. It's part of this massive, constantly moving system that connects huge economic forces, your own personal finances, and these giant market players. Getting a handle on this map is the first big step. So now the only real question left is, where is your quest for a home going to begin?